I'm going to take you through a cable trade.
Wait. Matron, take them away.
And a warm welcome to one and all. If this is your first time here, coffee obsessed, scruffy trader. And it must be true, says so, right there on my mug. So what am I doing? Well, I'm basically backing up something that I say. I, every morning, do little videos for the Scruffy Squad of what am I going to do before I do it. And then I put it onto a real-time trade and show you. So that's exactly what I'm doing right now. Now this is actually coming into play as we speak. So if you bear with me, I just want to check something. Yeah, this is about ready. So I'm just going to drop a little order in here, which is there. And I'll explain exactly what I'm doing in a moment. Just while because this is all real time, guys. Nothing's ever scripted on these videos. And bollocks. It's rattled away without me. Not to worry, not to worry. Just leave the order where it's at. And we'll come into that. Now, while that's having a little think, there is the idea just there. All right. And I put it in for them all the time. Okay. Why do I do that? Because we like a little yeah. They were taking the piss out of this. You know, it's saying I was a slacker because I haven't done 1,000 quid. So I thought, right, okay. But on my prop fund, my bigger account, I'd done 934 at that point. In 6 o'clock in the morning, and it's actually going to be better than that because I've actually got it at 11:43 at this moment in time, so I'm quite happy with that. And if you're unsure what that is, in fact, I'll show you a statement just to back something up, because I'll guarantee those people that stick them things up on YouTube don't. This is a live statement. It started on the 12th of the 7th, this particular one. I'm 44 trades in. I haven't lost a trade. And 43 of them are in the profit factor that they look for, which gives me 2.7. And I've made 15 grand since then. And if I come right down, open up all the deal tickets. There you go, 44 trades. There's the dates from today running down. Okay, so I'm quite pleased with that. Sorry, it's just caught my eye. Yeah, we were discussing various products and one thing and another, and I put my charts in and then I back it up with the video. All right, so you can see exactly what I'm doing and why I'm doing it. Okay, and now we're going to trade it. All right, so I'm looking for 10 pips out of this trade on a 5-minute chart. So there is my target. Now what I'm also doing is multi-time frame. So if I go out to the hourly, we can start building a picture as to why this might be short. Because you can put as many indicators as you like on the screen. The price itself is what will tell you what's going on. All right. And case in point, that thing where the guys were taking the mickey. It's all bollocks. It really is. It's a bit of a fable. Because they try and tell you there's a magic system. There isn't. There's no magic system. If there is, it's how you put your levels on the screen. these marks here. If you can mark a chart properly, and I've shown the guys how to do this, you're halfway there, all right? Because if you look through historically how I mark these up, the price is respected constantly, all right? And it doesn't matter where you go, it comes to these levels, all right? The very, very good psychological levels, magnet points, if you like. So what has this got to do with finding the market? We just got to look at it, you know, visually look at the thing. You can get way too much noise because you go onto various Facebook groups. It's full of shite, you know, and they are, you know, they'll do a photoshopped phone screenshot thing. It's no good, you know. They always have a Lamborghini that they've rented. It's no good. What you see here is real time, real world. I ain't no millionaire. I'm not particularly wealthy either. But I earn a decent living out of this. And that's all this is to me. It's a job. Sorry, I'm almost getting on one. I've got no time for wannabe gurus. I really don't. I don't know people sticking into me saying that I teach. I don't. I'm not a teacher. I'm happy to show you what I do, but I've got no desire to be an educator. This is my job. Right, sorry. What do I really did nearly get on one. What can you see? And I say this all the time. Trade what you see. Well, I see a range. Don't see any trend. I don't see the market going anywhere. So if it's ranging, what does it do? Well, it bounces like a pinball. Boom, 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 boom. So now what you're doing is, if you know what the range is, and you can see that by looking at an hourly chart, then you can make certain assumptions. We know ranges bounce around. So if that's had a strong drive and it's pushed up, but it failed at this level, there's a high probability it's going to push back down again. So just be sensible with your target. Get 10 pips. If you think it's ready to pop again and it's breaking the next level, get another 10 pips. Rather than try and hang on to a single trade and go, oh, I've got to hold it all the way down here. Well, what if it decides that it's going to test the top of the range up here? Are you better off getting your 10 pips, resetting, having another look at it, and then doing it again? Or are you wanting to go, oh, it's doing well, it's doing, oh, no, it's not doing well, it's going all the way up. Oh, I can't hold on to this. This is too much for me. I'm frightened of this. I'm going to pull the plug, and then thump, down it comes. Simple stuff. All right. And that's what a lot of traders do, because they're constantly told, put a mega tight stop in, and that tight stop will protect your account. Trust me, it doesn't. If anything, that is the worst thing you can do, because all you're doing is inviting the market to take the money off you. Now, there's a difference between a tight stop and a wide, or I'll rephrase this. A tight stop is useless, all right, because it'll take you out all the time. To time the market to within a few pips of the turn is incredibly hard. Incredibly hard. You know, I mean, look at this here. That spike. You know, it's a down candle off here, screamed up there, and then down. No. Look for roadblocks. So I'm happy to stick a stop up here out the way, and then average in up to there, getting a better price, because I've already got an idea of what I want. That's a sensible thing to do. I'm actually doing a webinar on this tomorrow for the 5%ers. If you're interested, there's a link in the description below. And how to break into a trade correctly to not only increase your profitability, reduce your exposure, and increase your consistency. Now, as you've seen in my statements, I run between 85 and 92%. And when I lose, I don't lose as big as you think. I just kill it. You know, if I think I'm wrong, I just kill it. That's simple. And knowing how to stage also gives you trigger points where you know how to kill it or where you know you should be getting out. And that's what the webinar is all about tomorrow. It's also about less is more as well. And the principles of less is more is don't outstay your welcome. You know, I don't like being in the markets any more than I have to be. I don't really need to trade anymore for prop. I've done it all this morning, and that'll have paid me quite well. And this is just backing up something I said for the guys. So sorry, let me play this out and then I'll come back and I'll tell you whether it's good, bad or indifferent. But basically the premise of this trade is I can see the range, I can see it's at the top, it's had a strong drive down, it's had an aggressive move back up, but it's ran out of steam, and we can see that because these candles are very small. It had a bit of a flush, couldn't push any higher. Boom, down it come, long tail, and now it's moving up with a possibility to roll back over. That's the general gist, and what I'm going to be doing is I'm going to average from there to there with a target of here, and the averaging will pay me more. And if I only get 50 quid, well, I only get 50 quid. It's that simple. So I'll catch you later, guys. Catch you soon. Okay, guys. Decided to kill the trade out. Why have I done that? Well, it's because I've done what I needed it to do. Stuck to my conviction. And I still believe in it. But there is a new spike coming now. And I don't really want to be caught in it, because in about 10 minutes when it all sort of generates, there could be a... and it's not something I want to be involved with. So I just decided, right, it's done what I need it to do. Kill it off and don't sweat it for the rest of the afternoon. But I just want to kind of raise something. If I can find it. Right, there we go. It's kind of a little salute to Jamie, because you're asking the right questions. But also, what kind of thing is it? It's second guessing yourself, because when I put in the sort of breakdown of what you've just seen, and it's done pretty much what I said it would do, and even in this video said it's going to go up to there, it's going to come back, and then that's the way it's going to be. He's asking if I was, excuse me a second, asking if I was optimistic on the trade, and he was a little bit dubious about his trade. What I'll say, because you can kind of see in this, went up, went exactly to where I'd marked in. You saw that before it was marked, and then it's come drifting back down. Don't be frightened of your trades. If you've done your analysis correctly, and in my case, I go from the top to the bottom and I look for confluences between them. So I've already got a dominant thread running through it. It gives me the confidence to hold the trade. Okay. So if you are confident, don't be frightened of it. Don't second guess yourself, because that can get you into a world of pain. And all right, sometimes you've got to sit in heat, but that's where less is more comes into it. I never go full position on point of entry. I build positions up, and then within that, I'm seeing the waves, and I'm taking money out and putting money back in. It's not scalping, it's just working the chart, because it's still the same idea. In other words, if I see the market's drifting down and I've got my money in, but then I see it starting to come back up, why give the money away? Take some out, let it drift up, and then put the money, or the position rather, you've taken out back in, and you've been paid instead of sitting in pain. Simple way I look at it. All right, it takes a little bit to get used to, but once you get your head round that process, it becomes a lot easier. And all I'll say is have a single direction for the day and make certain the trade was right before you took it. Because if it's not and you're unsure, you'll always second guess yourself. You'll always be chasing the market, and ultimately you'll always be losing money. And that's not what we're here for. We're here to be paid. And that's trading in a nutshell. So that's it for today. I'm done. I am doing the night shift tonight to help some of the scruffs, and it'll be on a single market. So keep your eye open, and we'll see what the Asian market has to offer with the Australian JPY. At least I think that's what it is off the top of my head. I'll check it later. But it's to help McNeil. So salute to you lot. And as always, trade well, keep your risk managed, and above all, do what you love, and the money will follow. See you all in the next one.